Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So, like I said yesterday, want to spend a couple of the videos this week going over some ideas for kind of like maneuvering or positioning into the recent correction, right? So whether that's um, yesterday talking about possibly selling puts, so credit strategies. Today we talk about leap contracts, and then I'm also going to kind of go over probably tomorrow, just like formulating kind of like a basket of names that you really want to put on your radar. All right. Um, so today, leap options. Pretty simple. They're just long-term options. Okay. It's um, most of our focus from a trading perspective, likely on like weekly contracts, 2 weeks, maybe like a month, 2 months out. Leap options, much further out expiration, like 6 months, 9 months, a year, even 2 years, 3 years potentially, depending on how far out the contracts are offered. Now, these leap options, they're really kind of they're popular into market corrections like this, or even if like a particular stock gets hit really hard, really sharply in like a short period, because they're basically like long term like basically an opportunity to like get involved for like a long term move in a stock, right? But basically have to find risk. So it's not tying up like the same amount of capital as it would be like. So again, I'm gonna use Apple as like kind of like an example here. But if you wanted to buy 100 shares of Apple and sit on it for a year and a half, 2 years, I mean, like that's a pretty intensive capital commitment, right? And for some people, I mean, that might not be an option, or it might be like a huge portion of their total capital or total portfolio. So leap options are interesting because it gives you that year and a half, even potentially like 2 year time frame to sit in the idea, especially if you have conviction that it's really going to come back or go higher, right? But it's also not as capital intensive as buying like the actual stock or the actual equity, right? And just want to go over quickly just like some tips, because there's plenty of similarities, but there's also some differences when it comes to like trading these leaps. The first being, and this actually really is not very option focused, but it's more about like the trade, the trade target or the trade potential, right? And what I like to say when you have like these really big moves lower or higher, I mean, depends on which side you're looking at, is to view the setup on the stock from where it is currently, not where it came from. All right, because who knows, we might not get back up to retest the high from a month ago for another 3 months, 4 months, 6 months, 9 months, a year, right? You don't know. I mean, yes, we've had plenty of rebounds that were really fast and things put in new highs, but maybe this time's different. So I really like view like the stock when I'm looking at entering like a trade from the perspective of it is where it is right now, right? Not it's not I'm not looking at where it came from necessarily. I'm looking at where it is, okay? So that will kind of help form my opinion of like how close or far out of the money I want to go, right? So obviously Apple traded up to 325, 330, right? But Apple right now is at 240, 230. So looking for a move back up to like 330, I mean, like that's almost like a 35% move, right? So that's like crazy aggressive to me. So like what I would be thinking is like, like manageable. Like I like these manageable targets. I'm thinking like 10, 15, 20%, right? Like going that far out of the money is like really aggressive. So like, I mean, to for Apple, I mean, like that would require to get back up to 330 again. I mean, that would require like a 75 90 point move from where we're at right now. So pretty significant move on the upside, right? So I'm viewing Apple at where it stands right now. So I'm looking at it as like a $240 stock, and I'm not looking at where it came from, which was like up at like 330. So like if I'm putting a target, it's like Apple as a $240 stock. Okay, so if you're going 10, 15, 20% out of the money, I mean that's in like the 260, 270, even like 280 area, right? I'm not necessarily looking for contracts that are up above 300, like 310, 315, 320. All right, so that's like first, like one of the ways I'm looking at this. All right, now second, from more option focused ideas. So let's go to Apple options here. So you'll see, like when you go out basically past like the first like 2 months, even like 3 months, that the option increments or the option expiration are going to be more monthly. Then it'll go to like quarterly, and then it'll go to yearly, right? So after July, it goes September, October, December, January, and then for next year it's June, September, and then January 2022, and then June 2022. So the expirations start to widen as you get further out. Now, what one of my focuses, like if I'm doing leaps, is liquidity, because on a day-to-day basis, like there might not be that many contracts traded on some of like these really like long-term options, right? So if you look at, like, just say for instance like the September of next year. All right, so this is September 2021, so that's over a year out. You can see, like, these are Apple options. You can see there's just not many contracts traded, right? Spreads, what you notice is spreads are fairly wide, almost like 10% wide, if not more in some instances, right? So these contracts, like the further out you go on, like the 6 months, 9 months, 12 months, 2 years, the contracts, they're not going to be very, very liquid. Bid-ask spreads are going to be wide. So for me, one of like the things I want to look at is I want to make sure, like, if I'm going out, like, better liquidity, and typically I will find better liquidity on quarterly expiration and January expiration, because those to me seem to be like the contracts that generate or get the more interest from a leap perspective on maybe like a day-to-day or like a week-to-week basis. All right, so again, like, just looking at the Apple options again, right? Like you see that you have September, October, December, right? So like you can see, like, December, yes, there is some volume, right? But what you'll notice is that, like, open interest is not that high. I mean, again, this is Apple, so relatively speaking, open interest and the volume is not that high. Versus if I look at like a January, which, so December, right? December of this year, and then if you look at January of 2021, right? So just one month beyond, and you'll notice that the volume much higher, open interest much higher, right? So that's what I would say. Like if you're looking at contracts like 7, 8, 9 months out, like I'd prefer to look at the Januaries versus the Decembers, because you can see the December, not a lot of open interest, not a lot of volume on a day-to-day basis, whereas the January, so just 1 month extra, right? Plenty more volume, plenty more open interest. You notice the spreads not nearly as wide either. All right, so focus on like quarterly or even like those January expiration, because they tend to get more interest, more volume. Bid-ask spreads are going to be a little bit tighter. All right. Now the third thing, I like to avoid complex strategies, right? Just because, again, revolving around liquidity, not going to have as much volume. Bid-ask spreads might be a little bit wider. So I am trying to avoid like complex multi-leg strategies. So, like, to me, I'd probably be more interested in just standard puts or standard calls, right? Like standard vanilla calls, standard vanilla puts. Just because getting in, getting out could be a little bit more challenging. Spreads are a little bit wider, more room for slippage, right? So I mean, call spreads maybe, put spreads maybe, but I probably wouldn't be looking at like flies, condors. More as you get more into like the exotic ideas of the option strategies. Those I'd probably be avoiding, just because liquidity is not as high, but as spreads are wider, right? So I'm really trying to stick with just like your plain vanilla calls, puts, maybe spreads, but even then, like, really would just prefer to be like regular calls, regular puts. All right. So I do think leaps, definitely an interesting idea. I think it's definitely worth something that you want to maybe either read up about if you're not really familiar with it, or if you are familiar with it, maybe start to kind of get a game plan together, because when we do get these types of market moves, like, and stocks really get crushed. I mean, some have dropped 75, 80% in the last month. It kind of creates opportunities. So opening up the playbook, looking at different types of options, different types of strategies, I think it's worth your while, all right? So if you like these videos and you're looking for more information on options trading or more information on options education, please follow up with the link in the description of the video for more information on options to play. Stay safe, stay healthy. We're going to get through this together, just family, friends are what's most important right now. So just take it easy, all right? Have a great night, and I will talk to you all tomorrow.